Eric Mother at Mother.com. Let's take a look at a stock here that has seen recent interest, and partly because of this move here in early June when the stock moved from, let's call it about 30 cents all the way to the highs here of about $1.40, $1.30. So a nice move in a couple of days and got people very interested. Now, a couple of observations. Number one is you'll see here that this move had uniform activity above 69.1, hence the high. We haven't been back there. And again, there was another rally attempt here, a little bit muted attempt that saw the RSI also move above 69.1 and back below it with uniform activity, another sell signal. So this interest in the stock recently does make sense, because after this explosive move, one would think that was going to be a follow through. But let me show you what the problem with this chart is. Number one, let's just take a look at the weekly chart, and you'll see that in the weekly chart, the stock has a history of steep drop in this period, steep drop here, steep drop, steep drop, steep drop, steep drop. It just tends to fizzle. And even here, if you take a look at the weekly performance in June when the stock was moving, it pretty much gave back all the gains for that week right there. So lots of reasons why this stock doesn't seem to move even when you think it's just about to move. Main reason is that it has a history of failing. And in fact, if you take a look at the long-term monthly chart, let's take a look at the all data monthly chart, you can see the biggest problem, and it's a fundamental error here, is to assume that a stock that has been stuck below RSI of 30.9, especially on the monthly, is going to have a sustained move higher. It's a very difficult RSI level to get past. In other words, trading below 30.9 on your monthly RSI is pretty much a recipe for disaster. More often than not, any rally is going to fade. And you can see that ever since the stock here, let's call it in the 150s, I don't know that that is split adjusted, but whatever. Ever since this level here, the RSI has been trading below that number of 30.9. Anybody who avoided the stock would have avoided the stock to the lows here, and let's call it most recently, the 52-week low for the stock is 22 cents. So if you use this principle, you would have avoided most, if not all, of this pain. So the fundamental error, in my opinion, here is, even though the stock is attracting a lot of interest due to the recent spike, the problem remains that we are seeing the RSI continuing to trade below 30.9, and that's a fundamental error to assume that a stock trading in this range has any chance of a quick and steady climb to the upside. That's the warning. We'll see how things go, but this generally is a stock that should remain in trouble because of where the RSI is trading. We shall see. Eric Mother at Mother.com, as always. Peace and blessings. ESCS.